Right, so everybody, we are done with block credits and we have seen section 16 also, and in the other videos. Now we are moving into the other parts of section 17. Section 17, the balance parts are like very simple one in your syllabus. So 17, if you see 17 subsection 1 and 2, the analysis I have written here in the flowchart. Simple, nothing but when you are purchasing something, you purchase something and use it for business purpose, you can take ITC. You purchase something, use it for non-business purpose, you cannot take ITC. So you purchase something, part of it business purpose, part of it non-business purpose. Whatever you purchase for business purpose, enjoy ITC. Whatever you have purchased for non-business purpose, you cannot take ITC. This is obvious, you know. And sir, when we are talking about business purpose, the interesting thing is whatever you buy, you should use it only for making, the business should be making taxable supplies, including zero rated supplies. That means you buy something to sell something taxable, then only you can take ITC. I told you various times in class also, like when you are eligible for ITC means, sir, you should have first output tax in your hand, then only I will give input tax in the other hand. So if you are making taxable outward supplies, then only whatever you buy, I will give you ITC. Simple. Not only that, but also if you make zero rated supplies also, that means if you are making exports or if you are making supplies to special economic zone also, you buy something for making these exports, you buy something for making the supplies to special economic zone, I will give you. Clear? So this is the point. So if you are purchasing certain things for making wholly exempt supplies, I am buying something to make exempt supplies, I am buying something to make non-taxable supplies, I am buying something to make nil rated supplies, I am buying something to make RCM supplies. So please understand here, all these are called as exempt supplies for the purpose of 17 subsection 2. That means if it is wholly exempt also, or if it is non-taxable also, if it is nil rated also, if it is supply covered under RCM also, if I am making these supplies, I will not have any output tax in my hand. So because I don't have any output tax in my hand, when I buy something, I cannot take ITC. So for example, if I am a doctor, I am making wholly exempt supplies, healthcare services. So in my hospital, I am buying AC. I cannot take ITC. I am a lawyer. My supplies are covered under reverse charge mechanism. So whatever I supply, I don't have output tax in my hand. My supplies are covered under RCM. So as a lawyer, I purchase anything, I cannot take ITC. Clear? So that is what the point. But if you are buying something for making taxable supplies or including zero rated supplies, that is exports and supplies made to special economic zones, then you can happily enjoy ITC. Clear? So that is what section 17 subsection 1 and 2 together we have discussed to the extent relevant for your level. Now, sir, if you see 17 subsection 4, it says 17 subsection 4 says for banking companies, financial institutions and NBFCs, they are buying various things and making taxable supplies as well as exempt supplies, taxable supplies as well as exempt supplies. So they can go with 17 subsection 2, whatever is proportionately used for taxable, they can take ITC. Whatever has been used for exempt, they will not take ITC. But in 17 subsection 4, we are giving an option to them. What is that option? I repeat, they can either go with 17 subsection 2 or 17 subsection 4. In 17 subsection 2, it says to the extent it is related to taxable supplies, whatever you have purchased, you can take ITC. To the extent it is related to exempt supplies, whatever you have purchased, you cannot take ITC. So that is what section 17 subsection 2 says, along with rule 42 43, that is not there in your syllabus, it is CA final concept. Now for them we are giving an extra option, that extra option is 17 subsection 4. What it says now, for banking companies, financial institutions and BFCs, whatever you buy, you take ITC on them, but flat 50% only I'll give. I will not give you 100% ITC. So if you see the analysis of 17 subsection 4, simple. If you are a banking company, NBFC, financial institution, if you opt 17 subsection 4, if you buy anything which is given in 17 subsection 5, 0% ITC, block the credits, you cannot take ITC. But if you purchase anything else from outsiders, again, I will not ask you the question whether you are using it for taxable purpose or whether you are using it for exempt purpose. I will not ask any such question. I'll give you flat 50% ITC here if you are purchasing anything from outsiders, or if you are purchasing anything from your own distinct persons. DPs means in the sense here distinct persons. That means Urta Punjab National Bank is taking the services from Urta Punjab National Bank Mumbai branch. So Chennai branch is taking services from Mumbai branch. So it is distinct person. From those people, if you take anything, of course there is GST Schedule 1, you know, para 2, supply between distinct persons without consideration. So there, in such cases, I'll give you full 100% ITC. That means what is the analysis of 17 subsection 4? You're a banking company, financial institutions, NBFCs, opting 17 subsection 4 option, 0% ITC will give you on 17 subsection 5 purchase. If it is purchase from anybody else other than 17 subsection 5, anybody else outsiders from them, if you are purchasing something, I will not ask you any question how much you are using for taxable purpose, how much you are using for exempt purpose. I will not ask any such questions. I will give you flat 50% ITC. And if you purchase anything from your distinct persons, I'll give you 100% ITC. Enjoy. So that is what 17 subsection 4. If you feel 17 subsection 2 is beneficial for you, go with that. Or if you want 17 subsection 4, you go with that. But this option is available only for banking companies, financial institutions, and NBFCs. Clear? And options once in a financial year only you can exercise. So once it is exercised, it is applicable for the entire financial year. That is what it is. Clear? This is 17 subsection 4. So with this we are done with section 17. Simple one. Okay, ma? Right. So let us move on to the next section, section 18. There is one small question also on this 17 subsection 4. Small example. So you can just go through that. You can pause the video and go through that. A simple question just for your understanding. That's all. Okay. So you can just pause the video and go through that. Right. So with this we are done with section 17. Subsection 1, 2 and 4. 3 is not relevant for you. It is a bit complicated thing which is there in CFNL. At your level it is not relevant, so don't worry about that. 17 subsection 5 we have already seen in another video. Right. So with this we are done with section 17. Let us move on to section 18 in another video. Thank you.